Last trading week, the market sentiment was shaped by geopolitical news and expectations of the Fed policy changes. There was speculation that amid the ongoing war in Ukraine, the US Federal Reserve may not raise the rate by 50 basis points in March, as was previously expected. Find out in our InstaForex video review how the situation has changed in the foreign exchange, crypto and commodity markets. Naturally, the US dollar strengthened amid geopolitical jitters as investors consider it a safe haven currency. The US dollar index, which measures its value against the basket of 6 major currencies, reached a 20-month high at 97.70. But at the end of the week, USDX went down as part of a correction as traders were taking profit. So the greenback closed the weekly session with a gain of 0.47%. Trading against the dollar, the euro hit the low of 1.1110, its lowest level last seen in June 2020. The possibility of talks between Moscow and Kiev revived optimism in the market, so the euro managed to win back some of the losses and closed the week down by just 0.44%. Meanwhile, traders are looking for more clues from the European Central Bank as inflationary pressures are rising in the eurozone. After a meeting with finance ministers in Paris, ECB President Christine Lagarde said that the central bank was ready to take to price stability. Among all majors, the pound sterling posted the biggest losses against the US dollar. In the previous weeks, the British currency was rapidly rising and had an overbought status. Now the risk of sentiment pushed the quote down to a 2-month low at 1.3270. Eventually, the pound closed the week at the level of 1.3400. The escalated conflict in Eastern Europe that turned out into a full-scale war may affect the UK economy, thus making the Bank of England change its decision on rate hikes. Analysts predict that the regulator will take a more dovish stance on monetary policy than before the conflict. Over the week, the pound lost 1.34%. Bitcoin keeps losing ground. The number one cryptocurrency failed to break through the resistance of $45,000 per token. The support is found at the level of $34,000. Bears targeted this level amid the risk of sentiment, yet the quote returned to the previous range, and on Sunday Bitcoin was trading at $37,500. In the meantime, oil advanced by 4.14% at the close of the week. Brent crude reached the level of $105 per barrel on the back of the Russia-Ukraine conflict, which may limit crude supplies to the global market. Besides, oil stockpiles in the US are decreasing and approaching a critical level. This can be also another reason for a spike in oil prices. Gold, being a traditional safe haven asset, retains its high growth potential. At the same time, the precious metal edged lower on Friday as investors decided that sanctions announced by Joe Biden may stop Moscow from continuing its military invasion of Ukraine. The new sanctions are likely to hit the European economy as well. As for now, gold is trading just below the level of $1,900 per troy ounce. You've watched the combined review of financial markets with me, Anna Kasatkina. Stay tuned.